Greetings, greetings, greetings. You are now tuned into the vault. Greetings, greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. You can always feel free to call into the live call, which is 443-296-2465. It's in the description. The number is actually a call-in number. You can call in while the show's live. It's never active outside of the show, but it's always active during the live show. So it's in the description. Feel free to look into the description and call in if you like. But today is the Vault episode 280, 2020 business forecast. Really looking forward to doing this episode with everybody. This has been something that obviously a lot of people listening into the Vault want to get a perspective on and find out, where the Vault lies with its loyalty moving forward into the 2021 business calendar year. So we definitely are looking forward to dispensing that business forecast from what we see so far in the business forecast. So this is the Vault episode 280, 2021 business forecast. And so we're going to move forward as we usually do. Always want to thank everybody for tuning in live, listening to replay. Always do so. Feel free to type into the chat where you're listening in live from, what city, what state, what country. Always appreciate it. So, we're in 2021, ladies and gentlemen. Business forecast looking forward. 2021 business is looking good for quite a few different sectors, ladies and gentlemen. We're actually getting ready to go into what's considered earnings season. It feels like we're in earnings season almost every other month, which we almost are. We're in earnings season every 3 months in the United States traditionally. So when we look at the business forecast for the marketplace in 2021, we see quite a few companies that have taken off over the past year because of the demand for internet companies, as opposed to brick and mortar. People have seen a massive transition of internet companies going out of the roof, and you're going to continue to see that. You're seeing healthcare companies have growth and challenges as well with different things, and so you guys can get a good idea of what it looks like on a superficial level. They call it the macro view. We see on the macro level that business is actually very positive and optimistic. Even when we look at the consumer indexes right now, we still see actually growing consumer sentiment, which is good because there was possibly a negative sentiment, even in the past 30 days, even in the past, year, we saw some negative sentiment, even pretty much post-election or even up until the election, we saw quite a bit of negative sentiment. But actually the stock market kept roaring through. It did roar through. The stock market has roared through previous lows and previous highs. The markets are actually at all-time highs as we speak. And so because markets are at all-time highs, we're looking at a perspective now. Shout out to West Palm Beach, Florida for tuning in live, listening to replay. Shout out to West Palm Beach. Appreciate you for tuning in live, listening to replay. So when we talk about 2021 business forecast, we're talking about what are some of the industries that are looking pretty solid right now. When we look at your industries such as your tech, tech has really performed really strongly. Quite a few people may be really surprised at some of the things that we may say today on the podcast because unbeknownst to people, ladies and gentlemen, we are experiencing some of the biggest fraud in the marketplace right now than we've ever had. And we are seeing people try to legitimize fraud in the public marketplace, and the public is asleep. What's actually the worst part is people in the public are getting their wealth stolen from them. It's sort of like when people look at that app called Robinhood, it's actually the complete opposite of what they think they're doing for people. It's supposed to be helping people make money. Ladies and gentlemen, this is, and we're not targeting them. We want to make this very clear on our podcast. It's not to them. But when we talk about the marketplace and when we talk about who's buying things, ladies and gentlemen, if you take whether it's a stimulus check, whether you take any type of unemployment or any people are taking those type of checks, people even taking business money and employment money, whatever, and people are putting it into these what we call Ponzi schemes, ladies and gentlemen. We are on the private side. We know what a Ponzi scheme looks like. Just because something is allowed to be allowed in the public doesn't mean it's not a Ponzi scheme. There are people that operate Ponzi schemes for 10, 20, 30 years, like a Bernie Madoff. So we have seen Ponzi schemes operate in the public. So when we talk about these Ponzi schemes that are happening in the public right now, people are blown away at the lack of validity and even in a cognitive dissonant moment of the fact that there are Ponzi schemes right in front of them, ladies and gentlemen. Now, we're not talking about the companies that are going on public exchanges, such as a NASDAQ, such as a Dow Jones, such as the S&P 500, such as whether it's Russell in foreign countries, whether it's the Hang Seng. We're not talking about those companies, ladies and gentlemen. We're talking about the private companies, which essentially are in the public, and they have Ponzi schemes going. You don't know who the owner of these companies are. How do you not know the owner of a company, ladies and gentlemen? Like, how do you not know how come you can't call the customer service line for the company called Cash App? First of all, if you have a customer service issue, how is this company does not have a customer service telephone number? Business forecast. When you're looking forward in business, you see these type of companies that are operating in the public, they're doing things, and you're like, wow, we got to pay attention to these people. Why? Think about the subscribership of Cash App. And we're not targeting companies once again. We're not the company that's going to bring up the charges on these companies. Just be very aware of that. But moving forward, when you do look a deeper dive in the tech sector, and you're looking at the tech sector, you're like, oh, what we want to do with these companies, do with these companies. Okay, look at this company right here. This company doesn't even have a customer service telephone line, ladies and gentlemen. So being ever vigilant in 2021 is ever vigilant when you were in 2020, when there was a time to be vigilant over capital. We can see right now, once again, tech has a role in the marketplace for growth because that is the medium of choice of high volume, high transactions right now. When we look in the forecast for the immediate future of the next 3 months, ladies and gentlemen, or the next 6 months, ladies and gentlemen, or the next year, we see obviously we're riding the wave and trend of tech. And why would you not, ladies and gentlemen? We're utilizing this medium to communicate. It is a barrier. Is a it takes away. It's a barrier there. It takes away barrier to entry. So, okay, 2021 business forecast. We talked about tech, ladies and gentlemen. You guys can go through the sector and look at what the tech sector really has to provide. It has provide substantial amounts of wealth for people in the past year, ladies and gentlemen. The past 8 months, people have literally almost doubled their wealth on the private side, easy, and that's hard for people maybe sometime to fathom. Maybe because they're not aware. When we say double, they 200% of their capital, ladies and gentlemen, and that's because they're on the private sector. They're on the sector that has made the investments early market. Last year, 2020, was a reset for a pre-market for another bull run here. We see a good strong bull run. We see good sentiment from the consumer market. Even though we see a lot of quote unquote fear and doubt cast into the marketplace, we see a lot of positivity, a lot of positive places in the marketplace. Internet entrepreneurs are still trying to promote growth and promote validity of their businesses and things of that nature. And that's what we're seeing right now. So we could sit there and talk about tech all day. Tech has ruled for obviously quite a few years now as far as its return in people's portfolios. We've seen companies just go skyrocket this past year in 2020 with businesses in the tech sector. And it's not to say that they could slow down. This is the era where we can see robust engines be turned on because of the speed and the power of internet, the growth of the internet, and that's huge. So we could sit here and talk about tech all day. 2021 business forecast. We could talk about tech all day. Obviously, tech has a hold on the marketplace. But when we talk about, you know, these companies now that are out here. Let's just go to the finance sector, for example. Um, we're seeing different type of IPOs nowadays in the certain sectors. When we're seeing less companies go to IPO, that's what most of the seniors in our field would say. We see a lot of less companies going IPO, which is initial public offering, because on the tech side, they're very aware of what they consider what's considered profit and what's just considered how much money they raise privately. So a lot of tech companies are really good at raising company privately, but then when it comes to actually performing in the marketplace, you're seeing less companies go public because then they have eyes on their books. You have eyes on what are their operations, things of that nature. So when we go into these regulated industries, such as the tech sector is regulated on, patents, um, different type of intellectual property that they have in that sector, uh, whether that's through hardware or through software. You see a lot of intellectual property have value in that marketplace. But let's just go, because Trust Christian and Evolve, we talk about it all. So let's go over to the financial sector, ladies and gentlemen, where people think this is get rich quick season, because we're still on the internet and the wild coyotes. We could play wild coyote. Ladies and gentlemen, if you think that cryptocurrency is not in its infancy, even with the internet, people are delusional. In 2021, cryptocurrency is still in the infancy, just like the internet, still in its infancy, ladies and gentlemen. People have not been actively buying their groceries through the internet for 20 years. If the internet's been around heavily for 20 years, since 2000, it has not reached its full capacity. Well, let's go over to those companies that say they're internet providing. They haven't reached their full capacity. So let's just go back over to the financial sector, where we get these get rich quick yuppies and fools, in the marketplace right now, that these young millennials that are crying wolf. Oh, we didn't have a good financial education, Trust Christian. So, can you give us the financial education that we need? You say it comes from the private sector. Okay. So where are they investing their money? Ladies and gentlemen, we know how many people are on Robinhood. They consult with us all the time. They reach out to the vault. Oh, I'm on Robinhood. I'm trading options. We were at parties this past year at the end of the year, Christmas parties. Oh man, I'm over here trading on Robinhood, man. You trading on Robinhood? Yeah, okay, but they're not telling you how much they losing. They just telling you they trading. It's like a fad. It's a trend. It is a trend. So let's go deeper, because this company is a financial transaction company. At this point, when we go over and look at the sector of PayPal supposedly has just adopted the Bitcoin frenzy. So something that they were touchy and hush hush about for years, they've been very aware of this for years, have finally allowed the platform to introduce itself to a very volatile risk. But guess what? They know it's not that volatile. Why? Why is it not volatile? Ladies and gentlemen, we were talking to a partner earlier today, and we were like, okay, let's just go look at the market cap of what company were we looking at? I think we were looking at Netflix, ladies and gentlemen. This is like a company that you can tell has good quality value. Um, Obviously the company is operating off of subscriptions. Netflix is obviously they're not just a national company; they're an international company. They sell internationally. Great company. So let's just go into the market cap, which means how much money this company has in its hands. This company, Netflix, has 200, as it's reported, January 12th, it's reported on these internet websites, and, they say they publicly release their books because they're a public company. That's perfectly fine. No worries. Once again, not financial information, not financial advice. It's just we're going off what the internet says consensus. You can Google this right now. So at this day and time, which is at January 12th. So once again, Netflix is at 200 billion 218 billion dollars, ladies and gentlemen. 218 billion dollars. 218 billion dollars. 218 $118 billion. Just want to really emphasize that number to you all, because we want to talk to you all about business when you see the fools and the idiots, because this is what elite business people look at. Elite business people look at elite business people are going to look at the validity of an asset, ladies and gentlemen, and we have yet to see actually one billionaire come out and say that they're buying Bitcoin. You see everybody under a billion talking that crap, but no one's talking about holding a large substantial holding. So once again, Netflix is a small company in some respects. It's still a big company. Obviously, it's $200 billion. When we say it's small, it's like if you compare Netflix to Amazon right now, Amazon's $1 trillion company. Trillion, okay? So we're gonna move over to this company that people have a frenzy about. There's no public information about this company other than this is how the technology works, and this is a what do they call it? They call it a limitation on how much of this asset is available to the marketplace. So it's introduced from the premise of scarcity, ladies and gentlemen. So elite business entrepreneurs know this. Like, we're looking at this. Once again, we're in the business forecast, 2021 business forecast, in the financial sector, where wealth is being stolen from the idiots. It's just the facts. They don't want to hear this because they don't want to hear this. So here we go. Let's share with you the wealth that we see is being stolen from people. Like, we've already seen this wave. Guess when the wave happened? 2018. Okay. Let's look at the wave again. Okay. Bitcoin, which is on an unregulated platform, there's no regulated exchange for cryptocurrencies, ladies and gentlemen, whether you all know it or not. There's no regulated platform for these cryptocurrencies. So, and this is sad. Like, it's sad that Trust, Christian, and Vault has to come out and speak about this, because it just shows the level of ignorance that's in the marketplace. So Bitcoin is at $612 billion. So somebody may say, okay, it's not $1 trillion company. It's not Amazon. It's Bitcoin. It's not even the largest company in the world. So it's not the largest company. This company, what does it make? It doesn't make anything. It makes a digital platform where people can exchange money through its internal value. Okay. So right now we saw a bull run come out of this asset. It has $600 billion in this asset, ladies and gentlemen. It doesn't have $1 trillion. Okay. So some people, ladies and gentlemen, went in the market and they actually tried to buy this coin. Why did they try to buy this coin? Because it's been going up. Okay. So it's been going up. Okay. It's been going up. Some people say, okay, I'm going to get a fraction of the Bitcoin. I'm going to get $1,000 worth. I'm going to get $500 worth. I'm going to get, I don't know what they talking out here. They talking craziness out here. They talking like, oh, I'm going to just, we're putting out into the mainstream what is really going on in the marketplace, because people are buying this asset, or what people call an asset. So they go and they say, okay, I'm going to buy this Bitcoin. And they go and they buy the Bitcoin. And they get a fraction of it for $1,000. Ladies and gentlemen, we're going to show you how a Ponzi scheme looks in the public. How wealth it's not even like, it's something you don't even want to speak of, because it's unbearable. Okay, so you go in and you got a fraction of the Bitcoin, right? And you got $1,000 or $500 worth. Let's just say you even got $2,000 worth. Ladies and gentlemen, in the past 24 hours, it has literally swung. The asset price has swung to the $4,000. So let's just say you get in at the high and you lose the money. When you lose the money, do you get it back when it goes back up? No. You lost the money. You lost the value. You lost the equity. Do you still hold the Bitcoin? Oh, I still hold the coin. So it should go back up in value. That's really how it works, ladies and gentlemen. This doesn't sound a little fishy like, oh, as long as I hold on to the Bitcoin, it's going to be fine. But you got in at a price and it went negative on you. It went against you. That's a loss. So how do you make up for the loss? Can someone type into the chat and explain that? Can someone email Christian@TrustChristian and explain that? How do you recoup the loss on, you didn't have a whole Bitcoin? The whole Bitcoin says it would have went, you held the whole one. So if it goes down $2 or $3 or $4, $1,000, you still hold the whole fraction of the coin. One coin. They've allowed people to buy fractions of a coin. So when you buy a fraction of a coin, what happens when it goes down in value and it goes past the number that you bought in at? Oh, Trust Christian, I got an explanation for you. We would love to hear it, ladies and gentlemen, because we're sharing with you all why you see a lot of billionaires and entrepreneurs say, this isn't worth our time. This isn't worth us losing money for our clients in. Why? Because the swings are so dramatic. $4,000 in a day goes down. Bam, you only had $2,000 worth. If you had $2,000 worth, how do you still hold a position when you lost the $2,000 in value? But no one can explain that. And that's why we're seeing it go on right in front of our eyes, ladies and gentlemen. Seeing one of the biggest financial Ponzi schemes happen. And it's sad to say it at this point, because we remember, 2 years ago, people were millionaires. I mean, we knew people that literally were making hundreds of thousands of dollars a day off of those type of assets, ladies and gentlemen. Hundreds of thousands of dollars a day. They weren't getting out the bed if you weren't talking over $50,000 or $100,000. These dudes were rolling around in the dough. And we just see it again right now. Like we say, we knew people that made exponential returns and they lost it all. And we just see like, wow, this is one of those situations right now. They're like, wow, people don't even understand the platform. It's not regulated. If you lose the fraction that you had, how are you still in a position to gain more? It went past. What if it goes back past negative your number? Do you owe them money? Oh no, I don't owe them money. Exactly. You don't owe them money because you just lost your value. So when you lose your value, how do you still hold a position? But oh no, they're not thinking about this. Why? Because there aren't that many retail investors in that, whether you know it or not. It's a lot of institutions that are trying to see what the technology can do for their business models. It's like space. Who's got the money to go to space? The government's not really trying to go to space anymore. So they got private companies trying to go to space. Well, it's the same thing on the internet. If you can develop this, you'll be in a great position. If you can't, then you're not going to be able to develop it. And who's developing it? Private enterprise. Like, oh, we'll invest the money to make sure we can get some college kids to develop this technology to where we can have, we can minimize fraud and theft through our circuit, through our system, so the government can't come after our companies. Exactly. Right. That's what they're gonna do. So financial sector right now is getting beefed up. You're going to see financial sector grow. You're seeing financial sector grow not just from the perspective of the Bitcoin situation. You're seeing from the financial perspective a Robinhood. Robinhood literally still to this point, they need to be filed as a brokerage such as a Fidelity. They are offering securities on their exchange as if they are a regulated platform, and they have said that they are a partial regulated platform. But once again, ladies and gentlemen, we were talking to a partner earlier today about one stock. Literally, ladies and gentlemen, people don't understand truly what insider trading really looks like anymore. We've kind of seen guys get scared of insider trading, even though it still happens every day. We don't see a lot of the public display of insider trading, ladies and gentlemen, but we're going to share with you what insider trading looks like, and it just happened in front of your face within the past 12 months multiple times. So insider trading looks like where Elon Musk is able to send out a tweet and literally say he's down with he likes this company called Signal. So this company called Signal is a private we can make sure we're accurate, but it's nevertheless it's like a private messaging platform. They have encrypted messaging, things of that nature, and so he actually said that this was a great company. But this is how stupid people are in the public, and this is unfortunate. This is how, if you are unsophisticated, you will get taken out of your wealth overnight. This is worthy of the entire podcast, is to listen to this 1 2 minute the spark that I'm about to give. So he tweets out that there's a company that he likes called Signal, right? Right. Next thing you know, the company was at $10. The company goes to $40, ladies and gentlemen, goes over $30. Like, so the company immediately has retail money try to pile in there from people that seen the tweet. Ladies and gentlemen, financial institution money has done their research. If the stock moves because of institutional money, it's moving because they did their research and their due diligence. They're investing in the business. So because he tweets out that Signal is a company that he likes, people go invest in the wrong company called Signal. Literally, this is the stupidity of the marketplace. They literally went, people, retail investors, they went and they invested in a company called Signal Advanced, because the company that he's talking about is actually not a public company. It's not even a public company. The other company, their stock went up to 30. Let's see. Within the past 24 hours, ladies and gentlemen, you say what insider trading looks like. This is what insider trading looks like. People say, oh, he took a position in the company and then it went up and then maybe he got out at the top. We'll leave that up to debate. We don't put anything in so, ladies and gentlemen, Signal Advanced. People thought that this is how unsophisticated we were. They didn't even go and read about the company. They didn't even read, like, okay, is this the actual company that he's talking about? Because it could be multiple companies called Signal. So they think, well, shoot, if he has if he's talking about it, let's go see if we can invest in it. And even just off his words alone, off the word Signal, people are like, let's go put some money into this company. The company goes up. The company literally goes up to a high of $38 yesterday, because he tweeted out a couple days ago, and now the company's back down to 16. So, okay, it got a little bit of clout. First, it was trading at 7. As soon as he says something, it goes to 30 something. Now it's back down a day later to $16. That's called a pump and dump, whether you all know it or not. And whether we want to admit that is the company that, if that is the company that he's invested in or otherwise, that's up to speculation. But we are very aware of what it looks like, and we've seen this guy talk about these type of things in the public marketplace that are ultimately like discrediting his legacy as an entrepreneur because of his lack of respect for regulation, ladies and gentlemen. And this is the bottom line. We're looking at it as, ladies and gentlemen, we all have to comply with the rules. And to give insider type of plugs over the internet, it's like, are you not censoring yourself for regulation, to know that, like, the regulators are going to come in and say you're participating in insider trading, you're considered to be incentivizing the marketplace. We can say people are champions for stocks, but okay, sometimes the regulators do want to know, are you invested in this stock before you actually go out there and push it? And then it really is not even the same company, or you're getting undercut deals or whatever's going on. Like, the company is not even the exact same company that you're talking about. And it experienced a massive amount of capital. And they do investigations into those type of companies. Like, okay, so how did you get to be the benefactor of this tweet or whatever? These are things that are going on. So when you look into the financial sector, ladies and gentlemen, you guys are looking at companies that are growing, and then you're looking at companies that particularly such as whether it's that type of company, Signal, or even the other company that they had, whoever, you can see the marketplace and where it's at right now for even those type of activities, which is not interesting. It's not good. In some respects, we can look at this and say, okay, This is not the first time that these type of things have happened when he speaks. Okay, so now we know that he's actually a market maker. He's a market mover. He can move the market with his words. He can come out and his tweets can be so powerful that he can sway a stock to literally go from $7 to $38. We've seen this with other companies on Robinhood apps such as a Kodak this year, where we can go and look at, let's just go look at that Kodak situation. Because that Kodak situation literally wiped some people out real quick too. We remember that Kodak situation. So Kodak, it was like a situation where it was like $24. It was like late July, and next thing you know, the stock's at like $2, like trading at $2, like for like a long time later. Like this is a beat up stock, ladies and gentlemen, and because a market maker, and we could almost say whether it's Donald Trump talking about Kodak came out with a contract or not, you could almost say is that insider trading once again, when they make some announcement and the stock goes from, uh, literally goes to like, it started out like $2 on that day, like 27th, and literally goes up to, uh, what is this high? We see a high of like, what is it? $30, and then it literally within less than a month or two, it's back down trading at like $6, and you're just like, wow, what the heck just happened there? Is that like what happened in that one day? We're pointing out to you the business forecast. Look for more and more of those situations to happen if you're really looking out and being ever vigilant and managing capital right now, because we've seen those plays happen, and we know that a lot of long-term asset managers are not actually in those stocks, Kodak or many others that are not performing. They were not performing previous to that. So why would someone have a ton of capital inside of that particular stock? But what happened was there were quite a few people that got an announcement and an alert on their phone. Hey, Kodak X, Y, and Z. It was at $10. It was at $15. It was at $20, and people were piling on in there. They were piling in through Robinhood app, and next thing you know, the next day, how are they getting taken out? Who are they getting taken out by? How does it that they lost value now? So let's just say, okay, they got in at 20, the stock went to 30. Guess what? The stock went back down 2 months later to $6. Did you make money? How did you make money? You lost money. These are the things that are going on right now in the marketplace. Like we just pointed out two examples, what people want, case studies that you can see in the marketplace, that how is it that if you got the Bitcoin at 20,000, if you got it and it went up and then it went back against you, how do you still hold a position? It's the same thing with stocks. But this is what you're not seeing, or if you're only in the public. This is the private side. We can see the Ponzi scheme going on. We can see the scam going on. But no one wants to talk about it. Why? Because it's unregulated at that. Who cares about an unregulated market? People are trying to manage billions on the up and up. You got enough people trying to steal it from you. So now you want it to be on a regulated platform. Or maybe you don't. And people are going to this platform privately, and they're telling you, CoinMarketCap's telling you, guess what? We sell our data to the United States government. Whoa. Well, why aren't you hooked up with the CBOE? Why aren't you hooked up with these people? And they're trying to do it. Whatever. We hear it. So, financial sector. We do see some things in the financial sector looking good. A lot of the big companies, big names, we see them just continuously becoming more and more robust with internet security, technology, being able to continuously put their technology on people's mobile device. You're seeing a lot of companies move forward with the mobile device push and play. So you're going to see a lot of banks. You're already seeing banks put money towards the mobile, just versatility and application. They're looking to do those things, whether it's depositing checks through your cell phone. You've all started seeing that transition where companies are depositing checks to their cell phone in the banking industry. You're definitely seeing a lot of transition. That means elimination of jobs, because why would you need to go into bank when all you gotta do is just deposit the check. Not to say you don't need to go into bank, but we are seeing branch locations open back up in the marketplace too right now, which is huge. huge because that just means that the banks were strapped for cash. They weren't getting as much foot traffic on the inside. When people are able to go on the inside, they're able to set up more business accounts. So you're going to see a lot of flood go back towards capital, starting entrepreneurs starting businesses in the banks when they start opening up these locations and branches. And we actually, it's interesting that we went into the bank actually today, and we went in. So do you hear us? We were talking about going into the bank January 12th, going into the bank, and they literally told us at the bank that they've been open on the inside for a month solid. So when we say open, it's not that they were closed, but there were quite a few hard branches, brick and mortar branches that were closed, and that put a crimp in hourglass in a lot of financial companies this past year. They took a massive hit, which is foot traffic coming inside of their businesses. So to see that they're opening back up, just having requirements, making the plays, we're seeing the marketplace open back up with the financials. You can't count the old robust engine, ladies and gentlemen, especially in the financials. They've really performed with the marketplace over the long term. You all can see that. So just watch your money when you're betting against the financials. They're literally about to have probably one of just look at their earnings coming out, ladies and gentlemen, over the next couple of weeks. When you look at these earnings that are coming out for these financial companies, it's going to be an interesting play here. Whether you know it or not, we've seen regulation open up with these financial companies where they're going to be able to do corporate buybacks. The fact that they're going to be able to do corporate buybacks, their stock's going to get more valuable. You're going to see these financials. You're going to see these financials literally take we could say forecast predicting out that these financials are going to take a massive run of the bull, just here in the front, because they're not just strapped for cash. They're literally having people get more money through stimulus checks or whatever, and they're gonna increase their services, ladies and gentlemen. They have to adapt to being able to get loans to people because that's what they get paid off. So right now, even allowing people back in, it just allows them to get the foot traffic to be able to give loans to people, and things of that nature. You're going to see a lot of changes, and we saw a massive uptick even in housing this past year. Housing was strong this past year. So going over from the financials to the housing, because housing is tied to the banks wanting to lend out money. So even when we look at housing right now, I mean, we've seen housing with very low interest rates, moderate into low interest rates, ladies and gentlemen. I mean, anybody and everybody that wants to buy a house right now, they know that they can pretty much buy a house with the interest rates that they're at. So we've seen a massive, we've seen demand right now for housing, ladies and gentlemen. Like, you can go look at whether it's Home Builders Report, whether you guys are looking at banks lending out loans right now for housing right now. I mean, they are making loans for people moving right now. People are moving during the quote unquote COVID era. People have been moving. Could we say more people have moved year over year or less people? And that's something that you just have to go to the numbers. When you look at GDP, when you look at the housing sector this past year, in all actuality, it may have been down because of COVID showings. Once again, foot traffic was down, where traditional, somebody showing a normal more houses because they have the foot traffic, whereas now they're doing the virtual tours. Ladies and gentlemen, as we see foot traffic pick back up in these different type of environments, we're going to definitely see why would more people be buying, even if we got a 20% increase in demand, or in demand. We could see that here. So we could see definitely great gains, great growth for people moving right now. If people are even experiencing where their children are being not able to go to school, you're going to see people moving. Why? They're not trying to wait where they have to worry about the kids being in school. So there's small contributing factors that we see on people moving right now. We actually have seen people moving for the past 6 months, ladies and gentlemen. We have good sentiment. We have people that are in the real estate market that are realtors and brokers or whoever, real estate investors, whoever, and we definitely are very aware of the fact that they have had growth. We've known people to buy $1 million property right now. Are you serious? We know people that bought over $1 million property right now. One, not just, I mean, well, just one, but I mean, still, that's like saying somebody's like, well, how much money are people spending on houses right now? People are buying $1 million homes. They're buying $200,000 homes. They're buying $500,000 homes in the United States. People are moving right now. We've had people that come through that are trustees that come through and say they're moving from California to Texas. There are people that are moving right now. So when you look at business forecast, once again, the housing market may have suffered because they have less foot traffic, but we definitely see great gains in the housing sector as things open back up. Bottom line, we're going to continue to see more of those things happen in the marketplace. We've already seen it. And it's been happening for months now. So we already went through financials, and we could stay on financials because these guys are going to get good gains from what we see. When we look over at even the housing, we see great housing development right now. I mean, housing has always been a robust industry for the United States. We've seen a lot of robust growth from housing market for the past 20 years, damn near. I mean, 20 years, houses are nowhere near where they were 20 years ago. So when you look at the housing market, it's benefited from inflation. It's benefited from a lot of market conditions. It really has. But the market conditions obviously have led the housing market in the United States to always remain pretty strong. So, you guys can look at many different businesses in that industry, no matter what, if it's construction or if you're looking at actual real estate leasing companies. You're going to see quite a few REITs making a ton of money this year. A lot of the REITs last year were making tons of money, giving out strong dividends. I think probably REITs grew quite a bit last year just because there was a consolidation. When there's a fire sale on business, a lot of those REITs went in and probably still went in and bought a lot of businesses that were commercial real estate space. People say, "Oh, the commercial real estate space is going away." You have no clue about what you're talking about. Like, if even if the mall is going to disappear, there's still going to be a huge warehouse for Amazon. So there's going to be a space that needs to be filled by human bodies. There's going to be a ton of space in that. Let's jump over into the tech sector more on, no, not just tech, but like artificial intelligence. When you talk about AI, when you talk about machine learning, when you talk about STEMs, when you talk about those things, you're going to see a massive influx of just a different type of financial allocation. I think when you guys look into what the tech sector has proved already, the tech sector has proved that we can enable technology to speed up basically vaccines. They're going to play off of this political play that's just happened. And companies with the AI and the machine learning are going to continue to have massive amounts of growth. It's crazy. It's funny. We would love to give you guys a underground bottom level tip, but it's crazy because you guys have to learn, especially listeners of the vault, is that there's a thing called proprietary information. And when you really focus on acquiring that private proprietary information, you'll see that like there is a difference between public and private. And I have to really make it a point to invest in my private education with Trust Christian in the Vault. Just an organization in general, you got to invest in your private education. Because there's things that we would love to tell you in the public that we still just can't tell you in the public. And then when you look at that contrast, what's the difference between private business and public business? There is a private sector, and there are private things in the private sector that traditionally are just not discussed in the public. But for us to come out in the public and talk about the exposure of these assets, or these non-legitimized assets, these assets that aren't even, these so-called assets that aren't even regulated, ladies and gentlemen, why would anybody that's wealthy want you to lose your money, ladies and gentlemen, to a Ponzi scheme? Why would they want you to lose your money to somebody trying to steal your money, ladies and gentlemen? And we're seeing it right in front of people's eyes, where some wealthy people have spoke out about it and said it's a fraud, and at the end of the day, they're not investing in it. But you still have quite a few TV stations and popular media saying we're going to give a platform to this unregulated platform. Why is that? Because they have $600 million. Well, Netflix has $600 billion. Well, Netflix has $200 billion. Are you giving them that type of platform every single day? And so we just see a big discrepancy, and that's why you're going to see a lot more of those type of technologies. That's why we want to bring it up, the artificial, the AI, the AR, the VR, things of that nature. You're going to see a lot more of that, especially with the marketplace and the situation that just happened. We don't want to call that shot, but we definitely see a lot of that. Uh, Clothing, we always see in the clothing industry that clothing is just becoming very much so more renewable and as well more disposable. So companies that were like were popping or that were explosive years back, like H&M, like they were like considered like these, like they put out cheap clothes but they're still very fashionable looking. And so these type of companies actually, they're a product of their own demise. It's like, okay, so are you creating green friendly products now? Are you creating clothes for people just to dispose of, or are you creating a product that's actually like not that's like not eco friendly? And because they're making clothes, which are they're saying they're making them cheap, so they're making them disposable. People have questioned these type of companies, and you've seen their companies pretty much plummet. I mean, we can go look at H&M stock right now, and we can see that some of these companies have taken what's called a beating, and that's just that. Some of these companies have grown. Wow, are you serious? Is these companies sometimes don't even have stocks. It's just crazy. You go look at these companies. You go look at these companies such as this one right here. This company's stock is worth $4. That's holding H&M. It's like, give me a break, ladies and gentlemen. What are people doing out here nowadays with these type of companies? Oh, they're a part of a bigger conglomerate. they're H&M's part of a bigger conglomerate that has $300 billion. So when you talk about Bitcoin, the company that owns H&M is worth $300 billion, ladies and gentlemen. We're not sitting here. Well, who's more reliable? The company that owns H&M. The people say, oh, invest the company that you actually wear, or the products and whatever. Right, but at the same time, are you buying their stock? And their stock's at $177. So we're not giving financial advice. We always want to make that clear. But when you look at their company, you see like, okay, their stock's more affordable. Exactly, and it actually looks more reasonable. Why? Because their company is a company that says, okay, we're dealing with consumer products, and we're dealing with, we have a great barrier to entry. Good. These are the type of things you look at these type of companies. It's like when you look at Bitcoin, it's like, who's really investing in this thing? Oh, people that want to do the fractional part now. So we're going to steal the wealth from the people that want to get fractions of the coin instead of actually getting the whole coin. It's like, right. So they don't understand how the move is, and it's just interesting to see that, ladies and gentlemen, in the marketplace. Once again, when we see the clothing companies, clothing industries, we've seen good returns come from those companies, though. Whether it's Nike, we can go look at a Nike right now. Nike has, we think, actually performed for pretty much good products performed. Yeah, Nike's performed month over month, and it's performed year over year. Nike has taken off. It's really shown that, even in the so-called economic downturn, they're able to perform at all-time highs right now. So when you look at companies in the marketplace that you say, oh, well, how are the, consumer cyclicals looking, such as a Nike, oh, I'm gonna go after Tesla, I'm gonna go after Tesla, I'm gonna go after Amazon, I'm gonna go after Amazon, okay, I'm gonna go after Google, I'm gonna go after Google. But we see Nike right here. Nike's at literally all-time highs right now, ladies and gentlemen. Like Nike, this is a company, once again, that, I mean, they have so much market penetration, it's not even funny. And once again, not financial advice, so we don't need to promote. We don't own these companies, we don't have relationships with these companies. We're just talking about business marketplace and companies that are out there. But when we talk about like a Nike, very strong company right now, we would almost be crazy to go against these fools right here right now, because they have pushed through, whether it was economic downturn, and literally have turned their company around, and literally are up year over year, and actually at all-time highs right now. So when we look at, whether it's a Nike, we can go to other ones, ladies and gentlemen. We're not saying, we don't have to keep making the same announcement, but we can sit here and say, when you're looking at some of these companies, we can look at different sectors. We can see, okay, companies such as a Nike has really performed really well in 2020. And I mean, what makes you think in the fact that they're going to get increased foot traffic to go to stores now, and they're still obviously doing a great job marketing over the internet. That's where most likely a lot of their sales have probably shifted. you can see that they probably shifted maybe more money into social media campaigns, with just trying to attack, get after consumers with social media marketing or any other type of marketing they have, whether it's TV marketing, whatever type of marketing. A lot of companies had to go back to traditional means of advertising because they weren't able to advertise inside of stores nowadays. That's huge. Being able to go inside a store, you're going to start a store, you're always going to be able to get a lot more foot traffic. So we've seen a lot more demand go up for a lot of different companies. And we actually see that there is actually a pent up demand for consumer buying right now, where when they get back in the marketplace from their lockdowns, that they are going to want to go out and shop. Obviously everybody wants to go out and spend money because of the lockdown, so a lot of superficial nature stuff is literally interjected into the marketplace right now, that because the market is by nature a nature being, it's not static, it's actually dynamic. People are looking at a dynamic marketplace happen right now, where people have looked at these companies go and say, oh my gosh, this company has grown to all-time highs, when we look at certain companies. But why would it not grow, ladies and gentlemen? Why would it not grow? I mean, when we look at companies, why would it not grow? These companies have put out massive, robust growth over the past year. When you see whether it was a Nike play, or you look at an Amazon play, or you look at any of these other players, they all made a run for the hills. They all made a run for the internet money. Internet money has shifted wealth. Like we say, definitely people have doubled their wealth, literally. They've doubled their wealth, definitely multiplied that. And so when we look at the marketplace now, for where is 2021 returns going to come from, are you literally about to bet against one of the largest companies in the world, which is called Amazon? Are you going to go bear right here because you think they're exhausted at all-time highs? Are you serious? You're going to bet against Nike at all-time highs? Who are you going to bet against right now at all-time highs? I mean, ladies and gentlemen, we are sorry to tell you, the doom and gloom that they paint on the internet of, oh, there has to be a stock market crash. Guess what? You just experienced that. Those things come to the marketplace by nature, not just by market manipulation. Who do you think wants to lose money? The market makers? They don't want to lose money. The market makers don't want to lose money. So since the market makers don't want to lose money, retail people shouldn't want to lose money. And since retail doesn't want to lose money, why would the stocks go down? Well, everything has to go down, Trust Christian. Ladies and gentlemen, it doesn't work that way. You're in what's called a capital equity market. This is where things have a number attached to it, just like your time has a value attached to it. So stocks have a value attached to it. Markets have a value attached to it. Because why? The internet has a lot of value in people's life. People can actually have meetings with their doctor through the internet. That is not something that was available 50 years ago. So for that reason, the internet stocks have value. But, some people say, oh, it's going to go to zero. Whatever. Once again, the business forecast, when we look at, we've covered quite a few different industries. We've decided to rip a few apart today because on this particular episode, we know our audience base can be from high net worth to retail investor, and what we know in the marketplace, whether you have job or whatever, when you're looking at the marketplace, do you have a common sense lens approach to the marketplace? Just look at the marketplace. You're sitting in the house with pent up demand to go shopping. What do you think your neighbors are trying to do? Right. So the business forecast right now, how can it look doom and gloom when there's so many companies that are primed to take advantage of opening up foot traffic at businesses? Why would you not see a restaurant company's value double when literally they didn't have people coming in the shop, and now they have people coming in the shop again within 3 to 6 months? Oh man, this is going to be the doom and gloom plate. It's going to be the doom and gloom plate. No, ladies and gentlemen, you're going to be behind the curve of the forecast of we see growth this month, January, because You're either seeing market makers take profits, or you're seeing people say we're going to just go ahead and we're going to run up amok. And that's what we saw last year. We saw tech run up amok. Tech ran up amok. We saw financials. We saw cyclicals. What industry did not grow? Someone said look at airlines. Let's go look at airlines, ladies and gentlemen, because people would like to think that these companies are trash, when in all actuality these companies are recovering drug addicts. It's like every time a company gets hit with a nature thing, nature such as COVID, they need a bailout from the government. Did you get a bailout from the government? Oh yeah, we forgot about that. So yes, people got a bailout from the government. Trust Christian. Yes, people got the bailout money. And this is where we are. The government got the bailout money. These companies got bailout money from the government. Okay, and so now we're looking at this company literally is up over $20 in the value of its shares in the past 6 months. Ladies and gentlemen, now this is where we talk to you all as trustees and say, okay, all right. First of all, this company, how are cruise lines making money when they're not supposed to be having cruises right now? Because the stock market is not the real economy. The stock market is the stock market. The economy is the economy. Money likes money. Well, guess what? I know that all of you all are sitting in the house right now, and you're going to want to take a cruise. Maybe you never took a cruise. You want to take a cruise. So guess what? I'm going to go ahead and get that stock at a great price. Why? Because you're about to make that stock go up by getting it and buying it and increasing their sales revenue. What about airlines? Yeah, they took a hit. So I'm going to go ahead and get in there. Why? Because you took a hit. So I know I'm getting you at a low spot. Right? Right. So we already know what this is. This is a classic game of supply and demand. Well, there's actually a huge supply of ships right now, correct? Yeah. And there's actually an even bigger demand being built up to get on those ships right now, despite what the doom and gloom media would like to say. So now we can see why the goddamn stock went up. Why? Because smart money, we smell victory. We smell it. We had our pulse on the marketplace. We saw not only that, the government gave them money. Oh, dang. Did you guys forget about the car companies? Remember when they got hit with an exogenic shock and the car companies took a bailout and then, they had to pay the money back? We don't want to talk about specific stocks. Somebody's pointing out another stock, Feel free to always type into the chat. We're going to see something over there. No, it's not. They didn't take no hit. And they didn't take no hit. That's just bottom line. American Airlines, what looks like... Exactly! We love where it looks at on the chart right now. We love where it's at. It's a great price. The daggone stock, American Airlines, is at $15. This company, before COVID, was at $30. Before COVID, the stock was at $50 in 2018. Now, it does make you want to look at the company and say, okay, what's going on for the past year and a half, 2 years? Well, we know what COVID did, but we're not going to talk money here in this episode with these companies. We're talking to you all about the business forecast. Once again, Americans have a lot to prove right now, don't you? Americans have to prove right now that, hey, we can recover after this freak of nature hits our business environment. They have to say that, you know what, we're going to recover. Well, their stock took a hit pre-COVID from $20 to $30 down to $9. They're back at 15. They're on the warpath. That's what they're on, the warpath. Now, if you don't think American resiliency for American Airlines, which is basically like the cheap airlines of America, like we could talk about this company because American Airlines is one of those companies that like they don't even have a first class. Like if anybody rides American Airlines, please like type into the chat. But like if you're riding American Airlines, like we don't even think they have a first class on. We don't even think they have a first class on American Airlines. Like this is one of those weird airlines that like it's like first come first serve. They say for seats and like it's just like you get in this long line and it's like the policies that this company has and like we saw this past year so much negative things come out about the airlines even in COVID times. Like you would think that they would be a lot more considerate to their consumer base that were flying on their airlines, and literally we got negative report after negative report after negative report over the internet about these companies and them kicking people off the plane. It's like, how are you kicking people off the plane in COVID times, ladies and gentlemen? Like this isn't something you have to question Trust Christian on. You can Google it. They were kicking people off airplanes in COVID times. You're showing too much of your body. It's like, when did you become the fashion police? Now all of a sudden we got these, you can't wear this and you got to do this and you got to do this. We saw stewardesses after stewardess and whatever, if the man stewardess or woman steward, whatever they call you guys, or these people, we saw negative commentary come out about these companies. Bottom line, they took a hit. Right. Excuse us. It's not American that doesn't have the first class. It may not be American because we don't fly on no American plane. American Airlines, we don't know, so we're not misquoting. Someone says Southwest, it might be them. We know it's some trashy sounding company. That they literally like they disrespect their customers. We got this on public display. Like you see people nowadays, they're on the airplane recording the stewardess just be completely rude to a customer. Like you're seeing all type of things. What they call it? Discrimination. There you go. You're seeing it. So when you say business forecast, we might not want to have too much money allocated to people that are literally having more and more media because of social media report, hey, this airline, we're not going to mess with this airline. Let's boycott this airline. Why? Because they kick off clients. They kick off customers for these reasons. Exactly. 2021 business forecast. So this is what happens, ladies and gentlemen. You start looking at companies, you're looking at transportation, you're looking at them like, okay. For all y'all out there with the trucking company stuff, we could talk about transportation. We could talk about these car companies and all these different different type of things. There's a lot of consumer stuff going on. But let's look at the business market, ladies and gentlemen, for 2021 business forecast. Because this is the business forecast. This isn't the consumer forecast. This isn't, you got a job, so you only just gonna pay for stuff. Or, we're about to see one of the greatest revolutions of entrepreneurs come out of 2021. Like 2020, they got birthed. Some of them got birthed in 2019. We actually had people type into our chat, people that have contacted us, said, oh, I became an entrepreneur in 2019. Oh, I became an entrepreneur in 2020. And they survived a wave across their face. They literally survived the wave. Trustees survived waves this past year. Why? Because there was a wave that wiped people out. But they survived that wave. They were able to capitalize on that wave. They put their family in stronger positions. When it's called a game of chess, they were able to manipulate the chessboard to their benefit, to their family's benefit. And we saw a lot of trustees do that. And we've seen trustees do that throughout the years. But particularly last year with the wave, we still saw trustees say, we got to get going. We got to take care of our families and things of that nature. So the business forecast looks so prime for opportunity right now to get out there and create a business. We had trustees this past year, even in the late fourth quarter, that they got in trustee training because we have a 12-week training session. So they got in the 12-week training session, and within that 12-week training session, they were already cutting their hours down from work. Now, everything's a case-by-case basis. Results are always going to be varied based off the person, the X factor, which is you. But when we saw trustees coming back to us saying, look, like I'm about to have a $10,000 a month business, so I ain't got to work no job. That's huge, because we saw people survive the wave. We saw people come through the trustee training program. They survived the wave. The wave right now, is it over? For some people, it might not be over. The wave is over, ladies and gentlemen. Like, listen to Mark the Words of Trust Christian in the Vault. The wave is over. But the wave that we're riding right now is rags to riches. It's rags to riches. It's rags to riches. What do you mean? It isn't rags to riches. We're in the tech infancy and the tech boom. Americans have the opportunity to ride the wave of the tech. That's that. If the country was going to go down the trash, guess what? They still have one saving grace. They're going to provide technology. And right now, you can see some of these tech companies coming up under fire because they're selling their technology to foreign countries. So how do you get mad at an American company that's employing American people, but is actually selling their technology to other countries? They're making Americans develop technology for other countries in the tech sector right now. So how can you be mad at that? And we know many companies that are doing that. So we just see a great opportunity for, American entrepreneurs. You don't have to be tech, ladies and gentlemen. We see essential businesses that are booming, ladies and gentlemen. Booming. And when you see what this administration brings in, we're going to see a lot of eco-friendly businesses. So any of you all that are like tree huggers, that's what they used to call them, tree huggers. You don't know what they call people tree huggers anymore. But if you're a tree hugger, like, this is your time to shine. Like, they're going to have, certain political regimes in place that really promote green friendly sustainable businesses, and you got to really think about that, ladies and gentlemen, going into 2021. What are going to be the sustainable businesses? I mean, this is where we are in 2021 when you see the political agenda saying we're going towards a low carbon emissions type environment, whether that's in tech, whether that's in any type of business that involves CO2 emissions. I mean, this is the scam of the day, as we call it. And so let's play and get some money. Okay, so when it comes to environmental friendly, these energy conservation type businesses, I mean, you don't want to put your money on them, but you got to. You got to put your money on these mammoths over here that are creating green friendly type businesses. They're, whether we keep going back to tech or whether we actually go to hard sustainable businesses that are creating eco-friendly housing. Eco-friendly housing has been booming for years now. So we're going to continue to see the minimalist mentality in 2021. Probably going to see a lot more minimalist mentality, even though you might still see more austerity because they're ostentatious, because there are going to be more people that are ostentatious right now because they've been deprived of being able to spend their riches. They've been making money over the internet and they haven't been able to be out and spend it. So we can see this type of marketplace. People still like going out and buying stuff, even though they're tech millionaires. So, we can see that there's a transition happening in front of our eyes. We just see a lot of the companies that were minus the foot traffic for the past 8 months, past year. We see that when they open up, why would their profits not go up, even though they were at cost expenditures? Ladies and gentlemen, you're actually seeing almost borderline socialism when you see the government bail out these companies and hold these companies up through economic downturns. So economic is the everyday common man. For these companies, the government didn't let them go under. They didn't let an American company, these international countries, they didn't let their companies go under. They gave them stimulus packages so they didn't go under. Okay. Now, we talked to an entrepreneur the other day, and they were actually talking to us, a very smart entrepreneur, and they said, well, hey, what did this person say? Oh, they say, you don't know how many bankruptcies are actually filed right now. But we know what bankruptcies are. Those are restructuring, ladies and gentlemen. So we're going to give you more of what the 2021 business forecast looks like. When companies find out that they can do more with less, you're going to see less jobs in the marketplace. Once again, these companies are finding ways to make money, to squeeze lemonade out of lemons, because they've been given a sour situation. The big companies, they're going to say, we need to implement an AI strategy to figure out what do we really need to bring back, because right now we just suffer from an economic loss. Not every company can say that, but we're talking about some of the smaller companies too. We're going to see them say, what can we do to get the most out of more? Out of less. Get the most out of less. And that's what you're seeing right now, ladies and gentlemen. You're going to see that when these businesses open back up, they're going to open up with that philosophy, and you're going to see margins increase, which is really good. We can see this right now happening, that these companies' margins, you're going to be there. It's like when McDonald's went to the dollar menu. It was like, okay, they used to have the $3 Big Mac and these other burgers and stuff like that, but they literally went to the dollar menu. It's like, okay, well, somebody's just gonna buy 3 sandwiches. That's a Big Mac. A Big Mac is 3 sandwiches. I mean, we don't know exactly. They got a triple pounder, quarter pounder, whatever they got, but they got 3 sandwiches. Is $3. But then they just went to where you can get 3 sandwiches separately for $3. Interesting. Business forecast 2021 business forecast. Once again, ladies and gentlemen, we always appreciate everybody for live tuning in to replay. Appreciate Memphis, Tennessee for tuning in live, listening to replay. Shout out to Memphis, Tennessee. This is interesting. We're going to see actually a strong, robust growth this year, ladies and gentlemen. The world has nowhere but to go up. It just sat down. People are going to want to get the doom and gloom. It's like, do you have doom and gloom for your life? No. Neither do the tech companies. Do you have doom and gloom for your life? No. Then neither does the financial companies. Do you have doom and gloom for your life? No. Then neither does any of these companies. Neither of these companies are going to say that they feel like they're not going to grow in 2021. Why wouldn't they? They've already taken a beating in 2020. They've been demoralized. They had to lay off people. They had to change people's lives real quick. Not something that they wanted to do. These companies wanted to expand. These companies wanted to hire more people, but instead they weren't able to do that. They were put with restrictions, public restrictions actually, and it seems like a arbitrary third-party referee is actually picking winners and losers, whether they're calling them essential or not calling them essential. They're calling them essential or not calling them essential. And then, when you see that not only some businesses essential or not essential, some players are getting actual stimulus and funds, a bailout fund, whereas others are not getting it. And it's interesting because in a country where 80% of the businesses are small businesses, it doesn't sound like a majority of those 80% of small businesses are really receiving those funds that sustain them to where they don't close, not just for a temporary period, but to where they don't close, ladies and gentlemen. And somebody can say, oh, where the airlines, they have a lot more going on and blah blah than a local restaurant. Sure. The business has been put under. The winners and losers have been chosen. The winners are the airlines. The losers are the restaurants. Bottom line. Who chose that winner and that loser? I thought we were able to operate freely. And not only that, 80% of the country is small business owners. That means restaurants. That means mom and pop shops. I wonder why tech was growing though. Well, they're not spending their money at the local mom and pop anymore. Might as well give it to the other companies, right? The winners and losers were chosen. Well, we can see moving forward, 2021 business forecast, that as it stands right now, the only thing that's going to save people is them getting trustee training, them moving forward with their lives in a way in which they can say, I cannot be a part of an economic shock. I have to put the stake in the ground, create your own forecast, and be your own Rain Man for your family. Because whether you know it or not, Jeff Bezos has been preparing for last year's run on the money. Elon Musk has been ready for that run on the money. Nike, Phil Knight for that company, he's been ready for that run on the money. Are you prepared for that run on the money? And that's what happened last year. We saw companies take advantage of the run on the money because winners and losers were chosen. And it's asking you now, the marketplace is asking you now, are you going to take the opportunity to invest in yourself and get a part of the wealth transfer that's happening through the internet or otherwise? Are you going to take advantage of the next bull run? Or are you going to be a victim to lack of information, lack of financial literacy? You don't get wiped out if you got a financial education, right? Right. So, we would like to think, and this is crazy because even in 2020, we had a huge demand for money because people were, right before that, people were employed. People had tons of capital. Unemployment was at all-time low. A lot of employees were investing in their private education at the vault. A lot of employees. They weren't in business, but they daggone sure were looking to be trustees. And so we've seen those people come through. in 2021 we'll probably have better expectations, just because more people are going to always seek more financial education. That market is there. Financial literacy, private education is going to be there because people know that they've been to, we talk to the message, we talk to the so-called millennial consumer that says, oh man, I don't know anything about money. So you leave it up to Robinhood, or you leave it up to these companies, to give you financial advice. The vault doesn't need to give financial advice. We talk about the marketplace just like any other so-called arbitrary third-party person was supposed to be talking about the marketplace. But instead, these guys like Kramer and these guys are getting paid. They're getting sponsored. He's getting sponsored. So how can you be mad that he's giving you picks that are like up and down? It's like, right, he's going to give you picks that are up and down. But is he really objective towards airlines? Like, oh, this is somebody that uses like contrarian advice towards business, like buy low, sell high. It's like, I feel you do buy low, sell high, but when you got companies that are literally on the internet, that they have social media where actual live customers are showing defamatory things about the people that they're hiring, how can you expect the company to grow? The company is literally having negative news flow about it. Now, people say, oh, I'm gonna still buy an airplane ticket. No, they're not. You don't know that. You don't want to believe that because you don't want to believe that businesses go out of business. But this is what the vault's here to tell you in 2021. Businesses go out of business. So we're not stuck on Facebook or Twitter canceling somebody. Because just like MySpace, Facebook will be. These people think that, oh man, just because I got a social platform and it's big right now, we can never lose. What do you mean? Do you know who Blockbuster was? They had a monopoly on DVDs and movies. Monopoly. Do you not know that? You don't know who AOL was? AOL was the only one on the tag. AOL was like truly one of the first monopolies on the internet. And they had a social media network because people had the email. They had an instant messenger. They had a chat. Oh man, these companies can't lose. It's too. You gotta go watch the movie Too Big to Fail. Go look at these companies. Oh, they're too big to fail. No, they're not. What are you talking about? Companies don't go under. Enron went under. Madoff went under. Do you hear? People go under. And you're betting on the loss of America? You're betting on the loss of your common neighbor, but you're going to bet on a tech company because they want to silence somebody? Oh man, you can't use a public platform. Ladies and gentlemen, there's this big thing right now about these companies. Okay. So they decided to take a stance, and guess what? They've exposed their hand. Whether these companies know it or not, they've turned into a dinosaur. What happens to the dinosaurs, ladies and gentlemen? They're dead. Dinosaurs are dead. Guess what? These tech companies are about to die. The ones that we see right now that have just taken an apolitical stance, they've just lost the millennial conversation. Why? Millennials don't want to see private enterprise take a position in political matters. Did you hear what we just said at the vault? For the private trustees that might be scared, for the public people that might be scared, guess what? The everyday common man, we do not want to see companies take a position in political matters. And when you do that, guess what? Your stock goes down. Oh really, Trust Christian? Oh, okay. Yes. Your stock goes down. Look at these companies. Look at these companies. Their stock has gone down because they've taken a political position. And these are tech giants. Oh man, these tech companies, they can't go down, man. They're the companies that are running the world. So why is your stock going down? Nikes didn't do that. You know who Nike is, right? Right. I wear Nikes, you wear Nikes, right? Right. But you don't have to be on Facebook. That's once you find out that they're doing political manipulation. Oh wow. Oh, you know who MySpace was? Yeah, I think I know who that company was. Do you know who AOL was? I think I know who that company was. All right, let's think of another one. Do we need to keep going through the list? I think I know who their name was because they took a position. Okay, that's what you're going to see in 2021. You're going to see continued, renewed, the people against the beast, the people against the machine. How can a tech company think they have enough power to say anything? We don't give a damn. Your platform's free, dude. Hold on. Did we need to say that again? Your platform is free. That means she's cheap. Oh, excuse me. We won't make those analogies. We won't make those analogies. We'll say that it's cheap. What are you selling? Are you selling subscriptions? Netflix is. That's why their stock's up. Yeah. So we appreciate everybody for tuning in live, listening to replays. Episode 280, 2021 business forecast. We look forward to this year. It's going to be a year-over-year gain again. You gotta get rid of that dark moment that we just went through in the States, ladies and gentlemen, or wherever you are in the world. And it's got to be one of those things that we're literally going to go plow for profits this year. You're literally going to see a lot of some of these bigger companies take profit right now. You're probably seeing some of these bigger companies take profit because they know they just exhausted the marketplace drastically. With the position that they had. So, definitely, we got to see, how are you looking for business forecast 2021? You can feel free to type into the chat. What is your business forecast for 2021? We have quite a few entrepreneurs, quite a few investors, quite a few people, even employees making, businesses, hobbies, or hobbies that are turning into businesses, different things. Like, we're starting to see, once again, actually an influx in entrepreneurship because when you have those negative situations happen, quote unquote, whether it's people losing their job or people just saying, "Wow, the job cut my hours," they tend to go into the business sector. So that's where you usually see employees. Once they get an abundance of employees that are hurting, they usually just end up going over to the entrepreneur realm to pursue a interest or a passion that they've had for years. And so we've seen this over and over and over throughout history. So it's very cyclical, and we see that, but it's very interesting to see that people it's just interesting, ladies and gentlemen, to see where the marketplace is gonna, what our forecast is, because we can see the growth that is coming, and that is here right now upon us. When you look at the growth, we see massive amounts of growth. We're not saying that one thing is going to grow and one thing is not going to grow, but we're just talking about some of the key performance indicators of some of these companies. These companies are looking to gobble up market share post COVID. Whenever we can say that that term is real, post COVID, they are looking to. These companies are looking to, continue to develop the technology in all of their business platforms, whether it is restaurants doing more mobile, just doing. We just gotta, I think a lot of restaurants said they had to adopt to that mobile business model where you can literally still order from their restaurant and they'll be very mobile friendly. They could bring it out to your car, or they have these contactless pays. They've made it a point to say we can keep profits coming into our company. uh so we know that you just kind of gotta play around with it. We see that there's quite a few industries that are still growing, but we don't want to be the bull. We don't want to be the bear of bad news and be the bear going into 2021 where you hear possibly some negative input on the marketplace, because ladies and gentlemen, there is nothing negative about what we see with these tech companies right now. Anybody that's implementing technology in their company, we see a lot of companies that are actually improving. um, and you got to be prepared for that. You got to see that, wow, you see the stock market at all-time highs. There's no way that you're not going to see this market continue to grow. I mean, it is one of those things you really, people, it's like one of those things. We heard one of our mentors told a story where when Tesla was an early stock and you saw a lot of asset managers, there's like billionaires, so he's talking about a lot of asset managers that were managing multi-million dollars, and how at the beginning they were on infinite earnings, which means that they weren't making any money, but these companies were reporting that they were selling a lot of cars and they're doing a lot of money to reinvest back into the company, so it's worth a lot of money because they're actually selling cars but they're not pulling out a profit yet. And our mentor would just tell us, hey, look, a lot of people try to bet against Tesla. So I try to say that this company's trash. It's going to go down in the trash bucket. It's trash. And they kept betting against it. And literally, they're out of a job right now. And our mentors told us this. And these were people that were asset managers for multi-million-dollar portfolios. And the fact that they even had, shorting a Tesla, not messing with a Tesla. We're gonna make sure that this company is shorter. Like, what are you talking about? Like, this company literally has hurt people's feelings, has put people in the poorhouse. Even in the past year, this past year, that company in 2020 literally put people in the poorhouse that were shorting it. And this is still after, despite all the years of people still shorting the company, just saying this company is not going to grow, it's not going to report, higher stock price. And this company has literally just grown out of the roof through stock pricing. You're just like, well, how is it going to keep producing these type of returns? And can we see quotient demand? A lot of times you see a lot of stock splits. We don't see a quotient demand. We just see a lot of stock splits. We actually think they probably did a stock split last year. So you see just a lot of stock splits. That's all. Every company does multiple stock splits in their existence. They'll do a stock split. So people shouldn't be weirded out about stock splits. But when it comes to Tesla continue to grow. I mean, ladies and gentlemen, we hear the demand for EV cars, ladies and gentlemen, and we don't want to be the bearer of bad news. Once again, we do not want to be the bear. It is not a bear market. There is a high demand for Teslas. Bottom line, there's not something we can just like go against and say, oh, people don't want the EV cars. Like, there are people converting to get EV cars. By that being the case, it doesn't matter if you want one or not. There are people that are converting, period. And so when you see that market growing, what can you say? What can you say? Oh man, well, the market's not growing. It's like, well, there's only a few players in that marketplace, and it's the one that you're talking about right now, Tesla. They're the ones that are actually like completely this. They have a range of vehicles that they're going truck, they're going this, you're going that. It's like, okay, cool. So they're eating up Ford's market share. They're eating up these other companies' market share. That's just being very truthful. They're eating up their market share, whether you know it or not. I mean, Ford will try to go do an EV car now. They're late to the party. A lot of these companies they look like they're late to the party because they didn't want to do the eco-friendly thing to do, supposedly. And it just looks really bad right now for these companies. Like, oh, we're going to create a hybrid. It's like, okay, and tell you either like, okay, there's a few companies that have done the hybrid correctly, and then they call it a hybrid. It's not even a full EV vehicle. So you're just seeing that. You're seeing companies that aren't even full electric, and they're like, come on, people do not want to just drive around in a Prius. That's electric. So you're seeing trucks now. Some actually big pickup trucks are actually fully electric. So you're seeing some of these other international companies, not just American companies with the cars. They're literally just they're going EV, and you're seeing international players put their cars right in the United States and sell up their companies, sell out their cars with EVs. Bottom line. And so you're seeing people once again, whether it's the American car companies, not just want to say we got to go there now because we can be what Tesla is to the world, or you can just see that they're just like, we're going to be a slug to the party. And once again, you're seeing a lot of international companies, whether that's Nissan, whether that's Toyota, that are going to go to full EV fleets. Why wouldn't they? They're going to try to. They're going to push that limit. They're not afraid of technology and things of that nature. So you're going to see you're seeing that right now where companies that are dealing with the EV are winning. And that's bottom line. Is like, once again, we talked about the political ramifications of even EV right now. I mean, who's not gonna be behind that in the political sphere? So obviously, Musk is going to still be the ultimate beneficiary of government stimulus towards this company. It's like, dude, we need to keep you open because you're an American company, and then we need to keep you open because you're doing cars or something. Like, it's just you're seeing subtle hints of what would be considered socialism, where people can pick winners and losers in the marketplace based off of policy, not based off of true certain things. There you can see that, and that's fair. You guys understand when you watch the business market that business isn't completely fair. And so we would like to think that business is fair, but this is why a lot of people don't survive in the business environment, is because businesses can sometimes be unfair, and people don't have the emotional bandwidth to handle the fact that it's not ever going to ever be fair. The possibility of that happening is not going to happen. it's gonna, we would like to say regulation is there, but if that's the case, if people would like to say, well, regulation needs to be there, ladies and gentlemen, if you all are saying you all want regulation to be there, why is it that you all are buying Bitcoin? Bitcoin is not a regulated thing. Like, this is one of those things that we just say, like, we sit around asset managers that are managing millions and billions of dollars, and they're not buying it. So why are the retail investors buying it? And then when we look at it, they're not. We actually looked at some reports the other day that said there were two major players that own over 60% or 80% of the Bitcoins. It's like, right. So it's really just a propaganda play. It's a media play to make you think that you're missing out. And really, people are losing money every day. And it's crazy. It's so sad because we just know people are losing. Man, it's sad, man. It's really sad. Like, it's something that we could sit here and laugh about it, but it ain't even that funny. How is it funny to know that you put in $1,000 and it swung against you $2,000 and you lost? It's almost like, do you owe Bitcoin money? That's what we want to know. And it's just sad, man. It really is. Like, just to see that wealth transfer happening. Some common sense stuff. Like, how is that not common sense to know? Like, if I put money in and it goes against me, I'm not up still. Like, it's just really odd. It's really odd, ladies and gentlemen. It's really odd. And we just wanted to give that forecast, painting a picture in some of the different areas that we see. Obviously travel is going to pick up somewhere in the year. Travel is going to take off, and that's why you all see, that's why you all see, uh, uh, that's why you all are going to see a lot of pent up demand happen in a lot of those sectors, ladies and gentlemen. So be prepared for pent up demand. The vault's not looking to be a Nostradamus. We do have quite a few successful investors around us that are pretty good at doing that, predicting the market. We're not predicting the market. We're talking about what we see at the vault in this particular episode. So it was definitely something that had to be a little bit lengthy to give over some of the different industries that we're looking at. A lot of people listen to the podcast, so we always want to just make sure that we're giving a good like barrage of different industries that people may be in. It's going to be huge this year, but you all can see that the Gov has given stimulus and they've propped up a market, and you're going to see a lot of people get wealthier this year. It's going to be crazy, ladies and gentlemen. We don't want to look at the doom and gloom. What is the doom and gloom? They found a vaccine, didn't they? They found a vaccine. They have therapeutics. Like, what is the reason for the economies to so-called still be sitting still right now? And this is where you're going to see that once again the stock market is not the same as the economy. And this is what we talk about with our trustees and trustee training. We give them a thorough understanding in trustee training that the stock market is not the economy. When people go through trustee training, we have a class with one of our trustees. He does a class for traders, and his name is Cornell. And if you guys go back and listen to archives, you can listen to some of his stuff. You may even hear his email. He usually does those webinars by demand. He actually did one, fourth quarter last year. So we definitely know that he could do one again this year, because when somebody is able to say, look, not just that I was able to create a millionaire this year or this past year, but to say like, look, I didn't do it for him. I just kind of shared with them some proprietary information and they were able to capitalize off it. Ladies and gentlemen, those are real stories. And like we say, we don't need to be rescuing 1,000 people or 1,000,000 people to become financially independent or be millionaires. Once again, people in trust deal with people in trust. So we're fine with the few. We're fine with the few, not the many. So when it comes to trustees or people that go through the program and they level up and they, become better people, they increase their financial means, they start a business and they grow. Ladies and gentlemen, of course we have a private community. Of course trustees work together. Of course they do. Of course trustees we can't stop trustees from connecting with each other and working together. So we already know they are. And there are trustees in the private sector last year that grew their wealth, bottom line. There are trustees that grew their wealth together, bottom line. That's what we know. So when it comes to us looking at 2021 business forecast, it's really easy. We'll have a bright, optimistic view on what's really going to happen this year. We're going to see quite a few people that they staved off a negative economic situation, and they were able to move forward with pushing forward with the fact that they were already in economic progress. A lot of people before COVID were in economic progress. quite a few people. So because we know that people were in an economic progressive mode, we're going to see that pick right back up. They're going to go right back to not necessarily working a job, but once again, people that were in the business environment, they're going to say, look, we got to get more aggressive. We just lost X, Y, and Z amount of dollars, or because we're open back up in different markets, we're going to go ahead and run up amok, and we're going to take that market share right back from those tech companies that took your attention for 6 to 8 months, trying to give you propaganda, trying to so-called manipulate your mindset, through algorithms on their platform, and then being able to data mine through platforms and things like that. It's like, okay, that's fine, but they exposed their hand when they really showed that they were intervening themselves in political situations. You can see that once again, ladies and gentlemen. It's just really, really bad look. We've already seen that, so we're really excited to see what's going to be the growth of some of the new companies that come out of it. Because when you look at it and you talk to a lot of younger generation, always in general, like, excuse us, when you see the younger generation, they don't want to be manipulated through social media. Social media for them was a connecting tool, a tool to connect with their friends and connect with like their peers. Adults, people that were older, like than 35 or 40, they've turned it into like this business environment where they're marketing and they're doing all this different stuff. And so a lot of the younger generation just continues to migrate from platform to platform, and they're not staying on one platform even if it has negative news out on it. Even they don't want to be involved in an environment where their right to freedom of speech is being suppressed. So when they see other people's right to freedom of speech being suppressed, they're just like, we don't like this. Deep down inside in their hearts, against their value system, it's against their value system. The younger generation under 40, they feel like they have a voice. They feel like social media is that opportunity to have a voice. They don't that doesn't bode well with platforms that are silencing anybody. If they even hear of you silencing anybody, they're going to migrate away from your platform. And that's why you're seeing the companies lose value right now, is people are migrating away from the platforms, because they're intervening in things that they really just shouldn't be dealing with. And that was great to see because they exposed their hand. And now you get to see that these people are already involved in these environments, and you can just take a position that they've already taken, which is they're ready to tank their companies. Their companies are trash. They are going to go down in the trash, and you all can see that. And ladies and gentlemen, we've already called it. It's been going on since December, since they've showed their hand late November and throughout the elections, and they've been showing their hands for the elections, for the past few elections. They've showed that they've had their hands inside of just way too much of what's considered business and consumer sentiment of market manipulation. And that's not good, ladies and gentlemen, whether you know it or not. They need to be regulated too. So we were talking to a partner earlier, and they were talking about how these companies are going to get regulated more, these social media companies and things like that, because they feel like they're not regulated. Well, that just lets you know you might not want to have your money dealing with these cats, because these guys, oh, we already know they started out the year on the wrong foot. They over here looking like, oh, we're going to take an adverse position to the politicians. No, it doesn't work that way, buddy boy. You don't take positions against the kings and the queens. You don't take positions against the people that can regulate your business. You thought that was cool? They took positions, and they actually publicized their names. And all that did was just let you know who's actually against the system. Who's actually against the system of free speech. That's who's against the system of free speech. The people that are so-called the social media companies. Not all of them, obviously, but the ones such as the platforms that have so-called censored and banned and censored people. Bottom line. Do you not see it? Is it happening in front of your face? But because of whatever reasoning, cognitive dissonance, somebody doesn't want to see, wow, why would they censor someone? Like, it's a free country, right? It's not. It's not. You can see that. So now their stock's down. You want to take a position against somebody that it actually has a ton of money in their own right? Guess what? You're going to lose money. You're going to lose money. You don't think that? So they don't think, ladies and gentlemen, that these companies are, oh, they're so powerful they can't go down. Clearly their stock has gone down over the past month. So clearly these companies are not who you think they are. Somebody said, and there was another thing. We got to bring this to your attention. Ladies and gentlemen, do you all know who Jack Ma is for Alibaba? You think he's on vacation right now? Oh, Jack Ma's on vacation. No, he's not. Jack Ma's not on vacation right now. He's in we could ask you if he's in hiding, but he's disappeared. Jack Ma is an unfortunate situation right now, ladies and gentlemen, because this is somebody that owns one of the he actually owns the largest Chinese company in obviously in the world, but he owns the largest Chinese company and has disappeared. And when you look at things like that in the marketplace right now, that doesn't bode well for China, for business forecasts looking forward. Well, ladies and gentlemen, what warranted where Jack Ma, the largest entrepreneur in the country, has disappeared? Not has been reported that he's on vacation. He's actually reported to have disappeared because the press in their country wanted to they interviewed, you guys can Google this, they interviewed the executives of the company, said, well, where is he? And they said they're not speaking on it right now. They didn't say he was on vacation. They said they're not speaking on it right now. This is the largest entrepreneur in China, probably in Chinese history, for real. And you're seeing this happen. So we just really want to put some things out there. Business forecast. You guys can look at China. Everybody thinks China is going to become this big bad bully. And if anything, they've been pushed out their forecast now for when they're supposedly going to take over the United States for GDP, which they haven't done yet. So the United States is still one of the biggest kids on the block for output in the world. And you see China, that literally this country, just look at this country that, you know, they have these things coming out about one of their, it's like Bezos going missing. It's like Bill Gates going missing. It's like Elon at this point. Elon's not even American. He's South African. So, you know, it's like Elon going missing. You know, it's like any major celebrity, business entrepreneur in the United States going missing. Jack Ma, he actually has impersonated Michael Jackson on many occasions in China. So he's actually a well-known entrepreneur, celebrity. And ladies and gentlemen, you guys really want to look into these things and look forward and say, you know, people try to bet against the dollar. How can you bet against the dollar when you got countries like China that are countries like China doing what they're doing? And the United States is actually trying to get its economy off the ground right now. But did they need to get their stock market off the ground, ladies and gentlemen? Not at all. Their stock market is roaring 20s. But now we're in the roaring 21s, and we're roaring all the way up. And is your family collecting? Is your family in the correct position? We know trustees are. Appreciate you all for reaching out. Christian at trustchristian.com. 2021 is going to be a big year. We're bringing out great things. The Trust Christian website is going to be up. And then we're going to go ahead and move over to posting you all to kind of get really plugged in more with the vault this year. But feel free to reach out, Christian at trustchristian.com, for Trustee Training. We still conduct Trustee Training. We actually have accountability coaching, so we're always going to continue to expand our services at the vault. A lot of people just want access to private Trustee Training and private consulting, honestly. And like we say, people are in the demand for that private education. We've definitely seen that. So we look forward to hearing from you all. We know it's going to be a great year. And we know that you just gotta have the mindset and look out and paint the picture for yourself, and not let media control your business forecast like they are controlling the weather. And doing that. So appreciate you all for tuning in live, listening to replay. Christian at trustchristian.com. Peace.